body's not against you. Maybe the pain you're feeling is your body trying to tell you something. You know, your body's symptoms are not purely physical. They always have an emotional and energetic component as well. If you'd like to learn how to assist your body's natural healing process by clearing blocked energies and understanding your body's messages, I invite you to enroll in my step-by-step course, Talk to Your Cells, because you are so much more powerful than you know.
Hello, I'm Jenna with Beachfront Financial, your financial BFF. Because let's be honest, we aren't getting out of this alive. But what we can do is make sure your family is protected and your future is secure. Do you know your FIN number or your financial independence number? That is the number that tells you when you can stop working because your money is working for you. Most people don't know theirs, and they're shocked to find out that they could get out of debt decades sooner without spending a penny more than they are right now. I offer a free financial needs analysis that breaks down the confusion around debt, insurance, and investments. That way you feel confident, safe, and empowered. We'll create a plan to protect your family, build wealth, and even lock in life insurance up to age 100. Virtual or in-person appointments are available, whichever works best for your life. Remember, you know your birth date, but you don't know your death date. So let's make sure that your family is protected and your future is secure. Scan the QR code or reach out to me personally and book a free consultation today.
Well, welcome everybody back to Mindful Mondays. Or another Mindful Monday. And so we know we're all on a journey, and sometimes those journey has challenges. However, you do not have to face those challenges alone, because we believe that we can do more together, and we're here to support you holistically and without judgment. So thank you for joining us today. So let's face it, when it comes to your financial future, there's a lot of things out there that are overlooked or not taught in school. Especially when it comes to generational wealth or securing your future without the overwhelm and more debt, not to mention death and taxes. Well, today I want to introduce you to your new BFF, because when it comes to finances, Jenna Miller is one person that you definitely want to talk to. So Jenna is joining us today to share some valuable insights on life insurance and planning for your family's future. Jenna, welcome to Mindful Mondays.
Thank you, Laura. Thank you for having me. It's a pleasure.
Absolutely. So I'm kind of curious, was there what drew you to go to the financial and the life insurance planning?
Great question. So I kind of did finances before, like billing and getting people health insurance, making sure they had coverage. So sometimes we would enroll them in like state plans and making sure that their health bill is taken care of, or their medical bill, in any way we can. So I've kind of been in the numbers world a little bit in the last 5 or 6 years. And so when I found this opportunity, I knew I'd flourish. So, and I love kind of giving people tips about their finances, because as I was growing up into 18, going into adulthood, my dad gave me some advice, and it was great advice, but I just didn't know what to do with it. It was just kind of like, okay, now what?
Do you care to share that advice with us?
Yeah, absolutely. So he just basically told me if I knew what I knew now at your age, I'd start a Roth IRA, I'd prepare for retirement, I'd get my life insurance and wills and powers of attorney now before anything could happen. So basically do those things at 18, get it taken care of, and then meet regularly and update it as you go.
Yeah, I would imagine being in the industry that you were, paying the claims and seeing that, you probably came across or saw a lot of people that probably thought they were covered but were not covered very well.
Absolutely. Or their coverage lapsed and they didn't know it, and we tried to get them, state coverage, or they're self-employed and they're like, I don't need that extra bill. So nothing will happen to me. You just never know.
Yeah, but you wind up paying for it in the long run, unfortunately, if something happens. And that's the thing. It's a kind of a gamble, right? No one ever plans on. I can tell you that I know I didn't. I mean, I lost my husband at 36, and I guarantee you when they wrote the policy for him, they didn't plan on paying that out when he was 36 years old, but they did pay it out, and it made a world of difference, and it helped cover a lot of things. But it's
Right.
like people may not want that little extra bill now, but what is your bill going to look like, right? If
Yeah.
that happens and you're not covered.
Exactly. Longevity of it. But that's
Yeah.
awesome that they paid that out because they try to find ways not to pay.
Yeah. So I know you would say it's kind of a critical component. So why is life insurance often considered a critical component of a family's financial plan?
Yes, absolutely. So it's critical because you don't know when you're going to pass away. You don't know if there's going to be an accident, if you will make it to 100, because let's face it, we all probably have debt. So what's going to happen to your family if you're the main breadwinner? If something happens to you or your spouse, because once you come down to, if you're a two income household, once you come down to one, someone has to make up for that income. If you're a one income household, you're really in turmoil. And then we get into the GoFundMe's and all of that. And who wants to, yes, it's tragic, but who wants to donate to a GoFundMe? We want to. We want to grieve and get through that process without having to worry about finances and doing the spaghetti dinner and all of that kind of thing. So,
Yeah, not to say that there aren't things, but you figure people aren't normally comfortable talking about it in the first place. A lot of people would be even more embarrassed to have a GoFundMe because they have gotten, to this point. Because if you think you didn't want people to know about it now, if you have to get to that point, then there's going to be a lot of people that are going to need to know because that's how you get the support that way.
right, absolutely. And a lot of people don't want to talk about their finances at all, but we do need to prepare. So just have that hard conversation now before you're gone or your spouse is gone and you're like, oh, you're looking down and you're like, I wish I would have just talked to someone like Jenna. Well, because sometimes like we'll reach out to our friends and family and say, hey, I got this new thing I'm doing, want to check it out, and they kind of pass me by, and I'm like, I know we're family and you probably don't want to talk about finances with family, but talk to someone.
Right. And I'm curious, what is your perspective as to why people don't like talking about their finances?
They're probably embarrassed, or if they do have a good income, they don't want people to know about it. They don't want to give handouts. It's a very touchy subject. So
It's
if
very
you have a lot
it's
of
very
it,
personal, right? It's very
yeah.
personal. Yeah.
If you have a lot of it, you don't want people to know because you don't want to feel like you have to help everyone and you're doing well for yourself. But at the same time, if you don't have enough, you don't want anyone to know that you're struggling more than it looks like because you're trying to keep up with the Joneses.
I'm pretty sure we've all been there. I've had that phase of my life where I tried keeping up with the Joneses, and I'm like, okay, why? Because it put us in a world of hurt. And I've actually gotten to the stage now where it's like, you know what? It doesn't matter if I talk about it because what my situation is my situation. It's not for anyone else to change, but I figure if somebody can learn from it, you know, the experiences, because yeah, I think that's tough because on one hand, I understand that if you make a lot or you're wealthy, you don't want everyone hitting you up for money, or they think that you owe them everything because you've worked so hard for that, or there's the scams, or there's everything else. But then there's also people that are struggling and embarrassed about struggling. But the truth is, you can't get help with anything unless you talk to somebody or let somebody know. So you got to have somebody to trust.
Absolutely. And that's what I'm trying to kind of create this community of just having a conversation and not being pushy about what I have to offer. Just here's the information. Let's have a conversation and show you how I can help. If you don't see the value, I'm not going to pressure you into moving forward in any way. But I see so much value and potential in this that I just want everyone to know what I do and at least know if they have some sort of coverage that there's other options out there, and you pick what's best for you. You know what's best, but I'm just here to kind of navigate you through those situations, and maybe you start to make some better choices in the future, and you maybe stop going to Starbucks so much, and you put, put that in an investment or something.
Yeah. The $4 that is now $8 or $9.
Yeah,
We used to call it $4. Now I think we have to call it $9 or $10. It
yeah,
keeps
it's
going up.
getting expensive.
Yeah, and but I think the important thing too is without judgment and meeting people where they're at, which is important, because I think, and you can correct me if I'm wrong, but what people think is wealthy is different to everybody, right?
Oh,
Some people that
absolutely.
means having 6, 7 figures. Other people that just means having no debt or maybe having a little extra. It means something different. So, in other words, you just kind of, I would imagine you listen to your clients to find out where they want to go and help them reach to whatever steps that they would need to get to, or how does that work?
Yeah, absolutely. So we just kind of have the conversation, show them like their budget. So we break down their budget and like kind of talk them through like, all right, how much do you spend on your streaming bills like Netflix and all of the variations of that. There's so many out there these days. They probably don't know all of them, but we try to nitpick and like, okay, how much do you on average spend for groceries a month? What's your income? And we just kind of pick it apart because sometimes you don't think about those things like the extras and like what do you spend going out to eat, and that's a big one. Like people don't really realize how much they're spending on the going out to eat, or I don't feel like cooking, but they just spent $300 or $400 at the grocery store, and then they're spending $300 or $400 on going out to eat. So you kind of gotta check and balance those and budget a little tighter and see where you're going.
Yeah, I would imagine if you, and I don't know if you have this, and we're going to dive more into life insurance, but since you brought that up on monthly budgets, because if anyone has ever had to write that down, when you fill out for certain mortgages or whatever, they want to know all your monthly expenses, your assets, and all this and stuff. But it's totally different if you write that down for when you look at paying for bills to if you had someone write down every time you spent money on anything for an entire month. Like, I mean, you just go to the store. Oh, I just decided to buy a soda real quick, or this, and watch how much that really adds up and throws your budget off. Have you ever had people do that?
Oh yes, I've done it myself. So everything I've done it myself, so I know firsthand. And I like many times my husband and I'll sit down and okay, we really need to focus on our budget. This is what we pay monthly. And I'm like, where is the extra like couple $100 going? Because it feels like we have more month at the end of our money. And I'm just like, I can't figure it out. And then you get your bank statements and you're highlighting and you're like, oh, maybe I do go out to eat too much and go here and there and stop at the gas station and grab a pop, and
Yeah,
you
or
gotta,
even the $2 here or the $1 there, you figure no problem. It's only $2 and $1. But when you start adding that all up, it's like, wow, that could have actually paid this, right?
yeah, you could have paid a whole nother bill.
Yeah. So, what are some key factors that families should consider when they're determining the right amount of life insurance coverage for their needs?
That's a great question. So what I do is I break it down into an analogy. So we figure out the amount a funeral creates of debt. So on average, that's about 15,000, just depending on if you're doing a traditional burial or a cremation. So we, on average, estimate for about 15,000. Then we estimate how much your income is on a monthly basis. Then we times it by 12 and get like the next 10 years of, hey, if I were to pass away, how much money would that monthly bills take up? So then we ask about the mortgage. How much do you have left on your mortgage? And then if they want to leave anything for education for their kids, so put money aside for a start in life or whatnot. So we do a little analogy, and it's called dime. And a lot of people will ask, how much is your net worth? How much? They just throw out numbers, and we actually break it down into the money that you would probably pay if somebody were to pass away sooner than later. You want the mortgage paid off. You want the bills taken care of for at least a couple of years.
Right.
So then you don't have to go out and get a couple of jobs. And 10 years is a good amount. Kids are probably out of the house or almost out of the house. So then you're not strapped so tightly. Or maybe they can get another job or get a job for you. So you don't have to have two jobs and help contribute to the household. So that's just kind of how I come up with a roundabout amount. So anywhere from 300,000 to 500,000 on average. And then we just kind of ask about budget. So do you think you can afford $50 just based on their age and health, and or $100? And then we kind of quote from there. So we don't know for sure until the underwriting comes back.
Right.
So we just kind of ballpark it. We'll aim higher on the premium end, but we'll see, okay, if we do this amount, say 300,000 at $50 a month, they're like, yep, that looks good. That looks like a substantial amount for my budget. So then we'll submit it. We'll have the application process and all that and underwriting. And with us, you're conditionally covered. So while it's going through underwriting, we'll hold that $50 in an escrow account. So a couple things can happen depending on the blood work and the medical records, whether we accept, because it's kind of like applying to college, whether we say, yes, we can insure you, but it might be a little bit more because of past things. So we have 30
So there's
days.
I'm sorry. So there is a health screening, a medical test, because I know I had to do it for one of mine too. They want to know how healthy or not healthy you are before they
Yeah.
start insuring you.
Yes. So you can do blood work or bypass it and just do medical records, but it does cost a little bit more for that aspect. So if you're scared of needles, we can bypass it, but you're going to just pay a little bit more on that aspect. So yeah, we'll just kind of dive deep. And once it comes back, if your health is greater than average, then your premium's probably lower. If it's higher than average, then it might be a little bit more, and we can adjust accordingly to your budget and keep it relatively cheap for you.
So you can make it affordable for them. And then if their situation changes, like say you help them reduce their debt or get rid of debt, then they can actually always increase that, right? So they're not like stuck at that. They can always increase and adjust their policy as they go.
Absolutely. And we have a couple of benefits, like an increasing policy rider. So if they want more coverage and their situation changes, they can do that. So the premium will stay the same, but their death benefit will change. And it'll be based on the age and health that they first started with. So
they wouldn't have to redo another screening to get it adjusted, right? It goes off of the original health screening.
And if they did get healthier, maybe they went on this crazy health journey and now they're healthier than they were, we can actually reassess that and we won't penalize. So they think they're healthier, maybe it doesn't come back quite as good because of their age. Well, we're not going to penalize them. But if it does come back better, we will give them the better rating and the better premium.
Okay. And it's just for people that are listening that may not know that term, can you define net worth, how you come up with net worth for people?
A lot of times it's kind of like, how much is your house worth? How much do you have in cars and investments? So basically, if you added up everything that you have, whether it's investments, material things, property, houses, you add all of that up, you kind of get your net worth. So when I first started, I think I got a policy when I was 18, and I was like, I think my net worth's like 200,000. I have a house worth like 150, and we have a couple of cars, so that really wasn't a lot, but it would have covered us at that time.
Right. Right. But you have to start somewhere. So does
Yeah.
it doesn't subtract then your liabilities against it?
For net worth.
Uh-huh.
I mean,
Or no? Yeah. Okay.
it can, but it just depends on, because we don't do it that way. So they just kind of ballpark it. Other companies will ballpark it based on net worth. So whatever that means to you,
Yeah, I know
we
when I
don't
so
really
I know when I
explain.
did mine, I basically added up what I had owed
Yeah.
left on the house, my debt and everything. So in other words, if something happens to me, everything's covered and taken care
Yeah,
everything's covered and taken care of. So I'm not leaving anybody with any debt. So
exactly. Yep, that's kind of how we did it too, but I just added everything together. Didn't really subtract the worth of the house. I just hopefully that we can keep it, so
right.
not sell it.
So I think you went into it a little bit, but maybe can you go into a little more detail and explain what a financial needs analysis entails and why it's essential for effective planning?
Yeah, absolutely. So our financial needs analysis kind of builds your financial house. So we have this house, and we usually have to get the roof off the ground. So we start with that um, life insurance as the foundation, because if we have all this debt and retirement, and we spend all our money, because usually when you're 18 you spend. So we got to get that roof off the ground and put some retirement funds in there. But because we spent it all as a young adult, we have loans probably as well. So we also need an emergency savings. So we're kind of building these levels of life insurance, emergency savings, retirement, and the roof of spending. So usually you want three times your income for your emergency in case of a rainy day, while you're building that investment. So that's kind of what life insurance is a safety net in the event something happens, but your investments are still growing and they haven't matured till we're 65 or older.
So you
So
can't pull from them until you're 65, but yet if death or something catastrophic happens, then everything pays out without penalties.
depends on your retirement account, but yeah, like the life insurance would pay out for sure. You'd have access to your emergency savings. Um, so that just depends on what kind of retirement account it is and the benefits, because there are different ones that you can pull out of earlier, I guess, and not be penalized. So
So you
yeah.
have different options for people depending on where they're at in their life,
Mhm.
where how much they need or what kind of plan they want. Because I know some people want to leave stuff for people behind. Other
Yeah,
people, it's like, first of all, I don't have kids, and even if I did, they should have made they should have made their own way by now. I just want to make sure whoever has my stuff coming to them is not drowning in debt from it. So
absolutely. Yeah, so a lot of people think a lot of their kids, especially because they're trying their best and they don't really know. And if they could leave some money, whether it's retirement or investments, then yeah, they start off way better than they are and that their parents are, and it will greatly help them. So we just kind of help people get that financial GPS, kind of like if you were to take a road trip, you're not just gonna head out to California and just go head west. You're gonna have a plan, map it out, and see what the fastest way is. Maybe you wanna make a stop somewhere while you're en route, but you're not just gonna wing it.
And at least know where your gas stations are if you're driving, right? So you're not
Yeah.
pushing. Don't want to be
Oh
pushing
yeah.
the car.
I I've gone through Ohio before, and we were in the middle of nowhere. Our gas light came on. I was like, "Uh-oh, this isn't good." But we had GPSs at that time, so that was helpful. But not knowing where you're headed, and you might end up in. I'm in Michigan, so you might end up in Lake Michigan if you just head west.
I've done that before where we were traveling along. It's like late at night. My husband was asleep and everything that said gas station, but it's just dark for miles. And I'm like, okay, I'm not driving 20 miles, whatever, out of my way. I'm just staying on this road. Next thing I know, the gas light comes on. I have no idea when the next gas. So I like wake them up. It's like, you might want to get ready to push. I'm not sure how far
Yeah.
we're going. So yeah, not a good feeling, not a good way to go at all.
Yeah. So we just kind of put into perspective like, hey, just have a little chat, get a little plan together, and we'll meet with people annually unless they need more coaching, I guess we could call it. Then they just call us, we set up an appointment, and we review what's happening. Maybe they bought a house, maybe they had a kid or a few kids and they need to add them to their policy. So there's child riders we can add, which is great because then they're covered. And if anything like medically, I don't know, diabetes or something that would make them ineligible as an adult to have life insurance, they can get up to 3 times the coverage. So I think on the higher end, a policy would be $25,000 to cover a child, and then once they're of age, about like 26, they fall off their parents' policies. They would then convert to their own for 3 times the coverage.
Do you ever see those adjust and go? Because what funerals cost back then is not necessarily what cost now or what it may cost in the future. So how do you, because I know you mentioned like about 15,000 kind of average for a funeral, but I don't know. Is that safe to say that's going to cover it years from now, or does that adjust or change at all?
I'm sure it's going to change.
Right.
So, we're not really sure at this point, but it's all an estimate. Maybe we have to allocate differently. So hopefully their house is paid down a lot more and it can kind of check and balance.
And if
in
someone
that
felt they needed more, then you just figure out more in it.
So if they're getting worried like, oh, funerals are getting to 20, 30,000 now, then we would probably review and yeah, let's give you a little more coverage just to be sure your family's set up. So even if you start out with like your first house, your maybe $100,000 house for you and your husband, and then your family grows and you only have like 2 bedrooms. So you're like, well, we might need to upgrade our house, and now you have a $500,000 house. So we're gonna review that and look at that and tell you, well, we're gonna have to up your coverage.
Yeah.
Adjust that a little bit.
What are some common mistakes that people make when they're assessing their life insurance needs that you've seen?
Having inadequate coverage, so not having enough. Going through those changes. So a lot of people will get life insurance and they'll set it and forget it and they don't think twice about it, and then something happens and like they had that first house, so now they might be able to pay half their mortgage off, but they're not going to get all of it and they might not have money for their kids. So I guess whichever spouse is still living, they're going to have to allocate that the best they can with what's available.
Yeah. And you touched on this a little bit, but in your experience, how can life insurance contribute to building generational wealth?
Ooh, that's a good one. So having that analogy in our dime analogy, the education, or simply a start in life. So if we have that, let's just say $100,000 per kid, they put that in their own account and it can keep growing. So when they're ready, they're going to have their college paid for or their house paid for. Maybe they take some of that and they invest for themselves. So they just keep passing that money along and using it for their own retirement, their own education. And if they keep it in investments, it's just going to keep compounding for generations and generations. And that money could last for a long time, and it could be like a legacy, like, oh, my grandpa gave me that money, and now I'm going to pass it to you when the time comes. And yeah, keep
Yeah.
going.
So how would you say families can begin to identify their financial goals and priorities through a needs analysis?
Priorities and goals. So if we can get people out of debt faster, so you have all those credit cards and they have 26% interest, we want to get those paid down quickly. So we're going to show them, take that small debt first, pay it off, even though it might not be the highest interest rate. Let's pay that down so you can take that $100, $200 and apply that to the next debt. We'll just keep it from lowest to greatest maybe. And then you're almost paying double probably on that. And then you take that chunk and you move it to the next. And by the end, you're paying double on your mortgage. So then we can get people out of debt years sooner. There was an example of like saving $130,000 in interest and getting them out of debt in like 9 years sooner. Just depends on, all of the debt and how much, and how many years we can. And then if you have extra money you're throwing at it, we'll add that in there and make it work for you.
Yeah, it definitely. I think a lot of it they call it the snowball effect, and that's where I used to always get confused because it's like you want the lowest thing of the amount, but then if you got some that are close, it's like I also want to get rid of the ones that have the highest interest. And depending on your credit rate, I've seen credit card offers come. They actually had the audacity to put on 59% interest, and I'm like,
oh my gosh, who would sign up for
in
that?
what world do you think that that's even any kind of a deal? It's like it just instantly goes in the burn pile. I'm like, you're out of your mind.
Yeah, that's crazy.
Yeah, it's insane of what it's going to. But
Yep, I don't usually look at those. They go
yeah,
right
I
in
know
there.
most of us like, yeah, I don't even bother opening them anymore. It's cash net, whatever. But it
Yeah,
just goes in the junk pile. So, so
absolutely.
what role do you believe the risk assessment plays in building a comprehensive financial house?
I think making sure you have some savings and you have your life insurance in place is huge. Taking that risk and not having something for your family, I couldn't imagine. I couldn't imagine losing my husband early, like before we're in our elderly years, and then trying to pay bills and keep up with life. I could never imagine. So that's the last thing I want to think about is my finances.
Well, it's the last thing anybody wants to think about. I
Yeah,
was
definitely.
37, my husband was 36 when he died, and it was laughing at lunch dead by 10. So, and I never thought about discussing also. We did happen to have a policy, with your company at the time. And so, we happened to have that. And I didn't even realize that it was on him. But
Mm,
the people were great. They came to me and they're like, oh, no, we have this. They took care of everything for me, handed me the checkbook so I could write checks and do stuff. They were very, very helpful. And I was fortunate that happened. Not that anybody's fortunate for losing somebody early, but my point is we weren't expecting that. We had plans. We had a whole lot of plans. Did not know it was an aortic arch dissection / heart attack. So it was something that was missed in his medical thing that the doctors ignored family history, and that's the way it wound up. But my point is, like you said, we don't know when that date is.
yeah.
It shouldn't be that early, but when it is, if we didn't have those, I would have been in a world of hurt because we
Yeah.
had a brand new house we had just built in a covenant area that was requiring X amount of stuff plus the credit card debt. I mean, we had it all. vehicle debt,
Exactly.
credit card debt, and it did take care of it. So I always tell people I don't wish hateful things on anybody,
Mm-mm.
but it is reality and a fact of life that it could happen.
Yeah,
So
absolutely.
yeah,
What
being
about
prepared for it the best you can. And I like the fact that, like you said, you can talk to people and you can kind of figure out what's comfortable for them. It doesn't have to be so uncomfortable for them that it's nowhere near their budget, right?
yeah, exactly. Even if you have to get 150,000 to start, because that's all you can afford. Something's better than nothing. If you can pay off that house, that's probably the biggest burden a lot of people have. But you don't want to go move into an apartment just because you can't afford your house anymore. So, yeah, having something's definitely better.
You're still young, but I know me personally going from dorm room living to apartments to a house and now a house on like 7 acres. Yeah, no way am I going back to an apartment and having someone
Yeah.
stomping on my head or right next door. I can't. To me, that's going backwards. I can't. I
Hmm.
could. I couldn't do that.
Yeah. Or worst case scenario, you move in with your parents.
And sometimes nowadays it's the other way around because we have to help take care of our parents.
Yeah. Yeah.
Oops. So it goes both
Absolutely.
ways. Yeah. Yep, absolutely. So, can you share some tips on how to regularly review and adjust life assurance policies as families' needs evolve over time?
Yeah. So what you do is reach out. You get our numbers personally if you work with us, and we're available most of the time. So you would just call me up and say, or email, however you like to communicate, and say, "Hey, Jenna, um, I'm looking at getting maybe an investment property or an extra house, or maybe we're gonna move into a bigger house. This one's just too tiny, and I'm gonna recommend you look at your life insurance, you look at your financial needs analysis, and that might involve like looking at your investments, see where you're at, if you need any adjustments, if you want to start maxing it out, if you need other accounts." So, um, yeah, just looking at all the options and kind of going backwards, like going back through the financial needs analysis to see where your budget is and what you can allocate for life insurance and investments. So if you have a bigger budget, maybe we'll get a $500,000, maybe we'll get $1 million. So
So,
it
it's
just
really something to stay on top of and do not set it and forget it, right?
right, because you never know. You want to know, unless you're young and you just go for it. You just get the big policy because you're young and it's cheap and you're healthy. But typically, people are like, "Ooh, we'll stick into the budget and get what we can afford, and then look at it later." So
Yeah. Or if you can
definitely,
afford it and stuff, that's great. And if if things don't seriously change, but we know life changes all the time, throws more things at us, so you never know what's going to happen. But
yeah,
but
that's for
yeah,
sure.
definitely. So, what steps should families take to create a solid financial foundation, and how does life insurance support that foundation?
The steps would first off get life insurance. That is the foundation of your financial house. So once that roof comes crashing down, in worst case scenario, you have that foundation, you can start building it back up quicker than not having anything and doing a GoFundMe and a spaghetti dinner and getting another job and making your kids have a job earlier than they should and all of those things. So our policies are great because you can have them for your whole life until you're age 100, but they are a term policy. So we don't make you have more health checks. Like I said in the beginning, it's just that one initial one. And then we kind of look at your policy again when the term comes up. We look at your policy when life events happen. You get married, you have kids, you buy a new house, you sell a house, anything like that. So big life moves.
So you may not know this, or you may not have experienced it. So I know there are people that are living healthier and older nowadays. So has anyone in your company that you know of have someone that has lived past 100? Because you said it's 100-year term. Have you ever had anyone live past that, and what happens? Do you know?
I believe my coach, her, I don't know if they had a policy, but her grandma lived to at least 100. She was up there. But we don't do too much, I don't think. Kind of like a congratulations, you made it to 100.
Right.
You don't need life insurance. So with that though too, we kind of teach you as you're growing your investments and you have your life insurance, it's kind of a check and balance. So we really need life insurance right now because our investments are kind of starting out at ground zero. And then your need for life insurance as your retirement grows kind of seesaws. So now you don't really need as much for life insurance, if any at all. But a lot of people still keep it so they can pass down that generational wealth. They can give some to their kids, their grandkids, their cousins. I know I don't have children either, so it's all going to my brothers as long as I outlive them.
Yeah. So you can adjust it as it goes if you needed
Yeah,
to.
absolutely. So it's kind of the decreasing responsibility theory that we know you need life insurance right now because we're growing those investments, and time in the market is better than anything. So a lot of people will look at the market and see the ebbs and flows and they're like, oh, I got to get my money out. But just that's what you can set and forget.
Yeah, and I believe, I don't know, would it be less expensive if you are younger? But I know you also insure people that are, older because maybe they've never had it and they want to start it. So is there a big difference between that?
um, I mean, I've saw people who are paying, I don't know, $200, $200 to $400 in life insurance for their whole life policy, and if they were of age, so we can insure people until about 65. Well, I think it's like 79 and a half officially, because then they can get a 10-year policy and we can still cover them. But once they hit like 70 and up, then it's just kind of like, well, you're a high risk and we don't really insure after that point. So you have to get in a little bit prior to at least 65.
That would be advisable, right?
Yeah.
Yeah, and I think because they keep removing the retirement age up more and more too. But
Yeah.
what are some important things, Jenna, that you would like people to know that we have not covered yet today?
I would say our policies are a little bit different than most. So, like I said, we have till age 100 and we can keep terming as you hit your term limits. We don't have a war clause. So, going back to 9/11, a lot of companies didn't pay out because they had the fine print that if it was deemed terrorist attack or war, they wouldn't pay out. So there was a couple of companies that did pay out. We were one of them. We paid out within 14 days. And we have a whole, at home office, we have a whole um, dedication to the families that were affected. And it was just incredible. Like, insurance companies kind of want to not pay. Like, they want to find every reason how they can get out of not paying. And we just kind of want to pay out. Like, we just want to bless families and do what's right. So that was one thing that stuck with me, is not having that war clause. We don't, the only stipulation we do have is 2 years for suicide. So, like, if you got a policy and you're like, oh, I'm going to commit suicide next year, I'm not very mentally stable, then
Mm-hmm.
depends on the situation. So we can submit a reconsideration, but typically we're not going to pay out until 2 years after if it's a suicide event.
But okay, so they actually do, but it's after 2 years. I have another policy on one of them too, where it used to be a running joke because if anything happened, they would investigate it up to 2 years. You know, after 2 years, there's not really an investigation. It just, gets paid. So it was kind of a
Yeah.
running joke between me and my fiance, but I'm way past that.
Good.
But yeah. So, but that's interesting because I didn't realize some insurance companies have a war clause, or if something like that happened, they would not pay out.
And a lot of companies don't give you your full policy. You have to request it. So right out the gate, we give you, it's usually electronic, but you can request a paper copy. We give you everything. You can read all, I don't know, 20, 30 pages. I didn't really look at how many pages, but I
Yeah.
trust. I
It's all the
trust
small
that,
print none of us like to read, right?
yeah, that I know it's good. But yeah, so look at your fine print and know what you're signing up for and know how your policy works. And that's what we do. We kind of explain whatever kind of policy you currently have, we will explain how that works and break it down more in layman's terms than, oh, it's this, that, or the other thing. And then we show you how we do it to help you. And if that's not something you want, we're not going to pressure you into it. We're just going to educate you and let you make the best educated decision based on your finances.
Yeah, nice. Are there any other clauses that you can think of that that insurance companies do that people should be aware of that you guys don't? Because I didn't know about the war one. So I would say some of those other insurance companies are probably not very good for military members. We were military, and like I said, I know your company, we were covered just fine. But
Yes. I don't think anything military specific, but I mean, if you're going out and fighting in war, they're probably not going to pay out. So that would be a huge one.
that is part of the job if it calls
Yeah,
for it. So
right.
that's what I say. I never even heard of that, but and it wasn't because of that my husband passed away.
Right.
But I know they were really good and they paid out. But I just, yeah, I'm one of those ones. And I know the majority of us do not like to read all the 10 million
No.
small fine print. So I didn't know that was even in some of the policies. You just figure if they say you're covered, you're covered. Because a lot of times, depending on who you get,
Yeah,
if you get someone that's not so reputable to represent things, they don't necessarily point that out. They just highlight all the good things and the benefits. But
exactly.
yeah.
So I think well, we have a couple of, so nothing else. I guess the fine print would be we have an option to do a waiver of premium. So what that means is it's for usually a couple bucks more. If you do get terminally ill, like cancer, or you can't work, you get some sort of disability, and it's 6 months or longer, we will pay your premium, your life insurance premium, and you also have the option to take out up to 70% of that policy. So if it's a $500,000 policy, you take 70% of that up front to go through chemo, or maybe you don't want chemo because you don't want to be sick for the last couple of years of your life, whether you make it or not. You want to live out those moments with your family, so you can pull it out. You can use it for treatment. You can use it for vacations. Do a little family vacation, or just kind of get things in order and do what you want with
Live life
it.
on your own terms.
Yeah. Go fly to Florida for the winter and come home and whatever you want to do.
Yeah. We got about 5 minutes left, Jenna. What is the best way for people to connect with you?
Best way
I know I have your
is,
LinkedIn up here, but we'll have it
yeah.
more in your social. But is there a better way for them to get a hold of you?
Best way, if they just want to sit down and schedule something, is to book on my QR code. I know that was like in the beginning, but just give me a call. I'm always available usually, unless I'm in an appointment, but I'll usually answer. If not, leave me a message and I'll call you back. But you just simply got to say, I just want to know more about my finances. You don't have to get into the nitty gritty. We'll have a conversation and I'll try and make you as comfortable as possible. And you can always say, I don't want to disclose, or, you know, whatever the case may be. We can figure it out in a roundabout way and ballpark and kind of get you where you need to be without getting too deep in things. And
it's a free consult or assessment, right, with them?
so everything pretty much we do will have conversations and educate you. No upfront fees, not unless you decide to move forward. So we're not going to pressure you into anything, whether you're paying or not paying. We just want to spread the word and educate people on their finances, because that's basically the leading cause of divorce these days, and that's not a way to end
Well,
things.
and even not, like you said, it's life insurance. And like I said, my husband passed away at 36, and no one expects to go that early. And it can leave you in a devastating position if you do not have something to help cover. And, unless you are fortunate enough to be debt free, which I don't know too many people that are these days, but if you're
No,
fortunate enough to it, then, it's not such a big thing. Um,
absolutely.
but yeah,
Yeah.
it can be huge.
It could
So.
decide your family's future.
It can, especially if you have kids and you have a family to look out for and everything else. So we got 2 minutes
Absolutely.
left. What do you want to leave the audience with today? What do you hope they come away with today?
I hope people come with, it's not as scary to talk about your finances as you think. I know it's uncomfortable and not everybody judges, and I'm not here to judge, and I'm probably in the same boat. So we're going to work together and find a solution. So we're working towards our debt-free day, and we're just a person just like you. So we're not perfect by any means. We're all human.
That is true. Nobody is perfect. I always tell people ditch perfectionism.
Yeah,
It's overrated. Nobody's perfect.
absolutely.
Jenna, I want to thank you so much for joining us today and giving us all that valuable information. It is important. I know none of us really like to talk about it, but it is an important part. And it's life. It does happen. And it's better to be prepared than to get caught with your pants down, right?
Yep, absolutely. Thank you for having me, Laura.
Yeah, absolutely. Everybody, if you have questions or if you've never experienced or had life insurance or you have questions about your own situation, please reach out to Jenna. She's really easy to talk to. She's got a great system that she can plug you into and help get you answers. So thank you for joining us all. I hope you all have a mindful Monday, and we will see you all next time.